How much bigger can Vanguard get?
You know, it's not Coke and Pepsi. You know, we're 20% of the U.S. mutual fund market. If you look at us on a global basis, we're only a couple percentage points of the overall market. So I actually think there's quite a bit of opportunity for us to continue to take our message. Certainly size is something that we always pay a lot of attention to, and you know, the word of mouth and you know, sort of the loyalty of our clients is actually what's really driven the growth. You know, we have many investors who just keep putting more with us over time. So it's less about attracting brand new investors in many cases and just building relationships deeper and deeper.
Equities have powered into 2018 after obviously a very strong 2017. At what point does it become irrational?
I think we're getting very close in the U.S. You know, the valuation's really high. I mean, every bit of good news seems to be incorporated into the market prices right now, and there's not a lot of room for bad news. You know, for the first time since 2007, we're actually looking at a situation where a balanced portfolio, 60-40 stock bond, might outperform an overall equity portfolio over 10 years. Because what we do know is, you know, no one can predict what's going to happen in the next 12 months. Having just said that, I'm sure the equity market will continue to skyrocket for the next few months, but where we sit right now, you know, we would expect the next decade to actually be very modest on the equity side in the U.S., a little less so in Europe and a little less so in Asia, but it's still overall lower than long-term historical averages.
How do you think the markets are going to digest the expected Fed rate hikes?
Very carefully. So, you know, I think they're built in at this point. The big thing you got to worry about is an exogenous factor that drives either a pullback from the rate hikes or you know, an acceleration of the rate hikes. And I think the thing to watch there are wages. You know, there is some upward pressure on wages, and you know, we're beginning to see that. So if the Fed all of a sudden hiked unexpectedly, you'd see a pullback in the markets. I think the stock market's kind of assuming that it's going to be very gradual.
In terms of the tax cuts that we've seen in the US, how are those cuts starting to play out now for corporates? How are they going to be spending that cash?
You know, so there's a lot of debate going on right now, and it's probably too soon to see, but certainly we've seen companies doing some hiring. We've seen companies talking about CapEx, putting more money back, some factory openings in the US and so forth. I think corporations are going to be pretty thoughtful. This is the first time in many, many years where I think US-based, US domiciled firms feel like they're on an even footing globally from a tax standpoint. And so I do think you'll see more investment back in states. Will there be some stock buybacks? Probably. But my guess is you're going to see some potential investment that could drive productivity up, which would be great.
What are your views on what we're seeing in terms of cryptocurrencies?
So, you know, I think the blockchain technology that underlies cryptocurrencies is one of the most exciting developments in technology. And I think there's all kinds of potential uses of it and applications that we're just beginning to talk about. You know, the cryptocurrency trading that's going on actually worries me a little bit. I think there's a lot of leverage. I think there's a lot of speculation. And, you know, an old investor told me very early in my career, if something seems too good to be true, it probably is.
Does it pose a systemic risk at this point?
I don't think it's systemic, but I think it's a strong idiosyncratic risk.